Bajaj Finance recently reported results, and at the first glance, profits looked weak. But here's the interesting part: the core business is still growing strongly. So, what's really happening here? Let's break it down. Let's talk about the company overview. Bajaj Finance is one of the India's largest non-banking finance companies, also known as NBFC. It provides loans across multiple segments, including consumer finance, SME lending, and commercial loans. Over time, it has built a massive customer base, and it has a strong digital lending ecosystem also. Let's talk about the business model. The business model is simple but very powerful. Bajaj Finance earns money by lending across different categories. First, consumer loans like EMI for phones, appliances, and lifestyle products. Second, business and SME loans. And the third, commercial and rural lending. But here's what makes it interesting: it cross-sells multiple products to the same customers. Think of it like this: once you enter the system, they can offer you many financial products over time. Let's talk about financial performance. Now let's look at the numbers. In the latest results, the core business remained strong. Net interest income grew by around 20%, which shows strong lending demand. The loan book or the AUM also grew about 20%. And the return ratios like return on equity remained close to 20%, which is quite strong for a financial company. So clearly growth is still intact. Let's talk about the profit. But here's where many people get confused. The reported profit actually showed some decline. And now this does not mean the business is weak. The main reason was higher provisions at one-time factors. In simple terms, the company set aside more money to stay cautious. If you look at the core performance, profitability is still strong. Let's talk about the risk analysis. Now let's talk about the most important factor for any lending business: asset quality. Bajaj Finance has maintained relatively stable non-performing assets, but this is something analysts closely track. Because as lending grows, the risk of default also increases, especially in unsecured loans. So going forward, this becomes a key monitorable. Let's talk about the growth drivers. One of the growth side, there are strong tailwinds. India's credit demand is rising, especially among the middle class. Bajaj Finance is also expanding digitally, which improves reach and efficiency. And its large customer base allows strong cross-selling opportunities. So structurally, growth visibility remains strong. Let's talk about the risk. But there are risks as well. Competition is increasing from banks and fintech companies. Interest rates can impact margins, and economic slowdowns can affect repayments. So it's always a balance between growth and risk control. Let's talk about the analyst insights. So what's really takeaway here is the headline numbers may look weak, but the underlying business trend remains strong. And for a company like this, the real focus is not short-term profits, but long-term growth and asset quality. So the takeaway is Bajaj Finance is a classic example of a high growth lending business where execution, scale, and risk management all matters equally. Going forward, how well it balances growth and risk will be the key factors to watch. कर्ज देने का सफर हो या ग्रोथ की उड़ान, सब्र से जुड़े रहने वाले ही बनाते हैं धनवान. Disclaimer is, this video is for educational purposes only. I am not a SEBI registered investment advisor. This is not a buy or sell recommendation. Thanks.